Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 108. And in this week's episode, I want to look at stocks versus options and just give you a quick little rundown behind the differences. We've been talking a lot about options recently because we have the new course that was released for option trading. I guarantee it's going to be one of the best option trading courses that you've taken out there that you can find. It's world class, and I highly recommend that you get it. So that's one of the reasons that really I want to cover a little bit more about options and stocks. And because if you're just starting out, you might not know the differences between options versus stocks and what are the advantages, disadvantages, or what things to really look for when you're getting into trading one or the other. Now, when you're getting into this, there's so many variables, so many different things that we really just don't have time to tackle every single little detail regarding options versus stocks. There's a lot of differences, but I will cover some of the main important points here in this week's video lesson, and that way you can do some further research and some more digging regarding the subject matter. So before we get started into this week's lesson, I do have a few announcements here, and the announcements that I want to share with you is basically the first thing is I do have a coaching video lesson available, not a lesson, but sample video. So if you were interested in a coaching session, I now have a couple of little quick clips from some of the other people that have done coaching sessions with me. So that way, if you're interested what it's all about, it'll give you some insight there. In addition, remember, we do have the options course that was released. So if you go take a look at the Options Mastery, Business of Options and Verticals, if you hit the Learn More button right here, this is a massive lesson here. Basically, when we get into this lesson, it's huge. The whole lesson is about an hour and 13. I go through and break down exactly what's in each one of these videos and what it's really all about. So that way you know and understand and see what this course is really all about. But it's a huge, massive course, and you get actual sample footage now. So what I've done is from certain videos, I've actually put in sample footage. So there's actual sample footage that you can see, maybe 3 to 5 minutes here and there, a clip. So we get into what each module covers. We get into just the details between the modules, and of course, you get to also see the sample footage also that's included in some of these videos. I can't really include sample footage from all the videos, but you get to see sample footage like you can see on screen here. That there's just a lot of knowledge just by watching this video lesson preview here for the sales video for this course. You're going to learn quite a bit just from some of the modules from the sample lessons. So anyways, this course is on sale. We're going to keep the sale open until November 8th, 2016. So that's in about a week and a half. So again, 22 hours of material, about 140-page study guide, $350. You really can't beat it. It's world-class learning and education. 22 hours. It's my biggest course to date. So I highly recommend it. And if you're brand new to options, I recommend you also take a look at the foundation course, more so because it really sets up the appropriate foundation to make sure you can handle this course. You don't really have to get it, but I really, really recommend it simply because I don't want you to be lost within the course, as you get into some of these things, especially the earlier modules. So if you don't have that foundation course, I really recommend that you take a look at that and get that course. But in either case, the sale ends November 8th, 2016. So make sure you get it before that, November 7th, 6th, 5th, or even earlier, because typically I don't run that many sales, and this is one of the best courses out there. It's world class and top notch. All right, so with that being said, let's take a look at the stocks versus options and some of the differences. So this is our quick summary here that I want to do. Just real briefly, and then we're going to go into a few of these details as we get into the lesson. So basically, when it comes to flexibility, we have only two ways that a stock can trade, okay? So a stock, you can really only trade it to the upside or you can trade it to the downside. With options, you can trade it in many different ways, and there's a thing called profit picture. So you can still trade an option to the upside, which these are profit pictures. It tells you where you make or lose money. You can even trade options if you believe the stock or the price is not going to move. So there's a lot of variations, or even to the downside. So you can trade them in a lot of different ways, much more so than stocks. So there's much more variations when it comes to trading options. Pattern day trade rule. When it comes to stocks, if you have a margin account, it's a T+3, which means you got to wait 3 days for clearing on your stocks or on your positions, on your trades. With options, if you have a cash account, again, you need a cash account, not a margin account, it's a T+1, which means you only wait 1 day for the clearing. You can call your broker more about that and they'll explain all these things. The costs and fees, typically when you trade stocks, it's more. Okay, when you're trading a stock, it's typically, let's say, $5 a trade, $10 a trade. With options, you can do per leg. Sometimes if you're trading complicated spreads, it can be cheaper. It could be $1 to $2 per contract. So it really could be less if you know what you're doing and if you're more active in trading. But with stocks, it's typically a flat rate. Sometimes you can get cheaper costs, like with interactive brokers, if you're doing low quantity of shares, because they charge based on the number of shares and not a flat rate. Also dividends, you get dividends with stocks, so this is a great thing. With options, there are no dividends. Again, that's a bad thing if you're looking for dividends. With probabilities, let's do this one backwards. You have probabilities when it comes to options. It's really easy to see them and you can really dissect them pretty simply. When it comes to stocks, there is probabilities, but they're more internal to you based on technical analysis and your evaluation. So you do still have probabilities, but you use them in a different way. It's a little bit more complicated with stocks, but you can still do it. With options, it's a little bit easier. The next thing is the difficult to learn, the difficulty of learning. It's really easy to learn to trade stocks, and I'm talking about the ease of the mechanics, the terminology, the way it works. This really is easy, a lot easier. Not easy in the sense of learning how to kick a ball or something to that effect, but it's much easier than trading options. Options are very hard and difficult because you have to learn a lot more. There's a lot more going on behind options. So the difficulty level, if you say, 1 out of 10, trading stocks is, let's say, just the learning aspect of how things work, right? I'm not talking about success or successfulness or profitability. I'm talking about just learning to understand them. Let's just say learning stocks is a 4 and learning options is, right up there with a 9 or a 10. So the difficulty level is way up there when it comes to options. Not too bad, but you have to put more time into it to learn. Also, the loss percentages, typically most people lose a smaller amount or a smaller percentage in stocks, and they lose much more when it comes to options, and that is because they don't know how options work. They don't understand options. In general, it should be the other way around, but the majority of people, they lose a smaller amount in stocks because you can hold them for a longer period of time. And this is where we get into the time factor, where here, if a stock pulls back, you can wait and allow it to catch up. Whereas here, you can lose if you don't know what you're doing. Now, you can also here, this is actually the advantage sometimes too, is if you know how time value works, this can actually be used as an advantage. For many traders, when they're just getting started, this actually works against them. But become a good option trader, this can actually work for you. So it can actually become a benefit. And that's why this one can actually flip-flop between one or the other, depending on your experience. And finally, the last thing that we're going to quickly cover is the amount you can make. In general, since with options, you use less of your capital to make more of a percentage, you can make more money. Now, of course, there's different risks involved, but you can make more money because they're typically a leveraged vehicle, whereas with stocks, you typically make less. Now, do I always trade options? No. Do I always trade stocks? No. It depends on what you're doing, the risks, the profile that you have, meaning what type of account because of tax consequences. So it really depends what you're really doing. But in general, options you can make more because they're leveraged based on the amount of income that you have. So really, when you start getting into this and you compare options versus penny stocks, they're a lot more closely related to the amount you can make. But from my standpoint, I'd actually rather trade options than I would penny stocks. But anyways, that's just a personal take. But as far as the amount you can make, if that's your big question, it really just comes down to experience. It's not that one makes more. It's just that on options, you have a higher rate of return based on the capital that you have, simply because it's a leveraged vehicle. So I hope that makes a little bit of sense. If it doesn't, just send me a note and I'll explain it to you in more detail. But in general, as we start getting into this, let's take a look on screen and just see what's going on and what's happening between, let's say, number one. The first thing that we're going to look at is the flexibility. So when it comes to a stock, and here we are, this is the Thinkorswim platform. When it comes to a stock, the flexibility of a stock, and if we just look at Apple and we right click and we buy Apple, if you analyze this trade, you can see you basically have this sloping line that goes up and down. This just tells you if the stock goes up, you make money. If the stock goes down, you lose money. If you short the stock, this is your other opportunity. If you short the stock, it goes the other way. So if the stock goes down, you make money. If it goes up, you lose money because you're shorting it. You're short 100 shares. That is basically all you can do with a stock. Now, if we go into the option spread, you can still do that if you look at a call. Let's just buy a single over here. And you can see you can still go and make money to the upside right here. So you can see I'm making money as the stock moves to the upside. So the white line is your current today line because options expire with time. The green line is what happens at expiration. Okay, so as time ticks forward, at expiration, boom, that's what happens. So anyways, the white line right here, what we have is, again, we're making money to that upside. Now, if I went the other way and I did a put, you can see now in this scenario, I'm making money to the downside because now I'm trading a put, which you can see is indicated right there by the put. Right there. You can see it says a put. Okay, so in either case, you have these two variations just like a stock, but now what you can do is if you get into this, you can also trade other more complicated spreads. So going out to, let's say, 50 days, I can trade a vertical. So I can buy a vertical and just share with you some of this concept. So now you can see white line versus green line. As that stock heads higher, you know, I'm making money just like a stock to the upside. But then once it gets into this safe zone, let's just say right in this area, if that stock stands still, I make, you know, free money because of this theta. In a way, it's free money because options decay and deteriorate. So I'm making that additional cash, 75 cents a day. And this white line continues to get closer to that green line, right? That's what happens. So that's one variation, okay? So as long as it gets into that level, I continue to make some money. Of course, you could create spreads that are a little bit more like, let's do a butterfly. Actually, a calendar is easier to probably understand. Let's do a calendar, and you can create another spread right here where it's more non-directional. So as we go into the 120, strike prices, you can see here, if that stock stands still, I make money. If it goes down a little, I make money. If it goes up a little, I make money. So when we start looking at this profit picture, you can see white line is my current line today. That's today. And as it gets closer, you know, that line continues to get higher and higher every day by 59 cents. And why is that? Well, because I sold the current month, the December month, and then I'm buying back for protection the January month. So basically the ones in January expire slower than the ones in December. So again, you can see the flexibility behind there. There's a lot more things you can do, and you can get even more creative behind this, but you can see that there's so much more flexibility when it comes to options than it does with stocks. With stocks, you only have really upside or downside. That's about all you can really do. Okay, so the next thing we talked about was the pattern day trade rule. So if we look at the pattern day trade rule, really this one is simple to understand. It's a T+3. Normally when you trade stocks, pattern day trade rule, you have to wait 3 days for clearing after you make that trade. For options, you have to have a cash account, okay, for this, to do this. Otherwise, it's still 3 days. Okay, so with a cash account, it's a T+1, so you only wait 1 day for clearing. So in theory, you can trade more. Okay, so I won't tackle that too much because if you're under $25,000 anyway, you probably shouldn't be trading that frequently. Just take your time on it. But that's about as much in detail as I'll get into it, is that you can have 1 day clearing. The next thing is the costs and fees when it comes to trading stocks. In general, okay, when I look at trading these two contracts, so these are two contracts. If I go confirm and send, you can see that right here they're margining me about $3. Now, the $3, I get discounts on my trades and so forth. So, so you might have the same rates as I do. You might have better rates. You might have worse rates. Anyways, everybody's rates are negotiated depending on how active of a trader you are and how much you're trading. So here, I'm basically paying $1.50 per contract on this account. If you go into a stock and you buy a stock, and I go ahead and confirm and send, you can see this stock, this one is $9.95 per trade. Now, we're in the simulated trading. In reality, in this brokerage account, I typically pay about $5. In the interactive brokers, I don't even know. It's a lot cheaper if you're trading less than 500 shares. So it really, depending on the broker and depending on what you're trading. So it's important for you to know that if you're trading a large sum of shares, let's say 5,000 shares, maybe you're trading a smaller stock, it's better to probably look at a broker that's a flat rate and that's it. However, there's other brokers that charge per 100 shares or per share. They might trade 0.005 cents per share. And then after 100 shares, it adds up to, a certain amount. So in either case, depending on the type of trades that you do or what you're trading, sometimes it's good to have 2-3 brokers and kind of, say, okay, well, these trades are great for options for that broker. That broker is great for trading low quantity of shares. And this broker is great for a lot of shares for penny stocks. So it's important for you to look at that. But in general, you can get some pretty good rates when it comes to options because of these rates that you can get. Whereas with a stock, sometimes you're paying $5, $10, $15 for some brokers. But with options, you can usually get, if you're trading just small contracts, you can usually get some pretty good rates. Next thing I wanted to cover was the dividends. If we look at the dividends, you're not going to get the dividends when it comes to options. There's no dividends because it's a contract. When it comes to a stock, if you're trading things like an Apple, if you're trading things like Verizon, you're going to get your dividends. But if you're, trading options on certain stocks, you're not going to get a dividend because it's an option contract, which also means you have no voting rights if you're thinking about voting, but most people don't really vote anyway because they're holding that stock for a shorter period of time. But in general, options, you don't get a dividend if you're holding it for 3 months, 6 months, a year. You don't have a dividend. With stocks, you do have that dividend if the stock gives you a dividend. So if you're trading like the SPY and you're holding it for, let's say, a year, 5 years, you're getting your dividend. If you're holding on to Verizon, you're getting your dividend. I don't know if Goldman Sachs pays a dividend, but I think it does. Then you'll get your dividend. So in either case, what happens with options is you don't have that dividend. If you're looking to buy and hold it for a while, you're just not going to get a dividend. With stocks, you get a dividend. So if you're just a person that wants to buy and hold things for a long time, probably better off with a stock because you get your dividend and you don't have that time value. The next thing is the probabilities. This is one thing I really like about options. So if we look at the probabilities, what we can do is take a look at, let's just say I go to Google, okay, and I change my value here, which you can see at the top. I can go to option theory and then I go to probability of in the money. So now what you can see here is I have probabilities that got changed on this side and that got changed on this side. They basically gave me percentages, okay? So I have these percentages now right there that were given that are based on the probabilities of these things working out in the money. So if I'm looking at December, and Google just now actually had earnings, so if you take a look at it, it's after hours right now, we're bouncing about $9 up. So in either case, if we're looking at Google and I decided to buy, let's say, a $880 contract or $870 contract, it tells me the probability right there. Look at that, 870, the probability is right there, 13.89%, boom. It tells me the probabilities for the Decembers exactly right there. Okay, if you want a higher probability, you're gonna pay more money, obviously, but it's a higher probability of it working out in your favor. Now, the same is true as if you're going into selling contracts. So again, you have a 10% probability over here working out if you're doing the put side, right? So if you're buying the put over here, you have a 10% probability. Now, the flip side is true. If you're selling the put, so let's just say I sell this put, sell a single, and analyze the trade, and let's here make this a little bit more normal looking. So here I have the inverse of that, of chance of working out. So here, if we're really looking at it, here's a single, sell, one contract, 700, $2.10. Okay, so this one, the inverse of that, 700, we have 10.92%. So opposite of that, call it 10%. We have a 90% chance of its success if I go ahead and sell this contract. Because you can see, if the stock right here stands still, I make money. If it goes up as far as it wants to, I make money. Even if it goes down a bit, I make money up until this point right there. Now, the white line right there is the current today's active profit and loss graph. Eventually that line gets closer because every day you make $13 from that contract. So my chance of success on this is really 90%, which is pretty high. Of course, I'm putting up a lot of capital on this, and that is simply because it's a naked strategy. But in general, you can see it's a $700 contract, which gives it 10.92% chance of working out if you buy a put, but if you sell the put, it's about 90% chance of success. Okay, so that's the next thing. The other thing, well, with probabilities when it comes to regular stocks, let's look at this instead. When we look at regular stocks and probabilities, you have probabilities when it comes to regular stocks. However, the problem with regular stock probabilities is you need to understand how technical analysis works. So between ABCD patterns, between the volume, between price spread, the behavior, the price spread, if a price is moving this much or a price is moving this much. So all those things you take into account, and now this creates your probabilities. And the more things in your favor, the higher probability that you have. So with stocks, you still have the probability, but it's more about your own evaluation of probability and not a true calculated probability as you do with options. So with options, I really like the probabilities that we have, but with stocks, you just don't get those. You don't get those probabilities that are a direct number. So that's one of the great advantages when it comes to the options, is that you got the numbers for the probabilities. With stocks, you have to really do it yourself. The next thing is the difficulty to learn. The difficulty to learn. Again, I talked about stocks being pretty easy. Relatively speaking, it still takes a long time to get to profitability. To get to profitability takes a long time in both of these instances. But as far as when you're looking at just learning general concepts or understanding how things work, okay, I'm thinking, okay, how does this work? How does that work? As far as just figuring things out, stocks is a lot easier, way easier. When it comes to options, it's much more difficult to learn and understand how they work, how they behave, because you also have 4 parts to the trade, right? So you have a buyer and a seller when it comes to the calls, and a buyer and a seller when it comes to the puts, and now you start getting into really weird and creative strategies as well for risk management. So it's a lot more difficult, whereas with stocks, you just have upside, downside, buyer or seller, that's it. So, there's a lot less things to really learn and understand when it comes to just trading stocks on their own. And if you're just a basic investor buying the SPY, for example, it's just much easier to just trade the stocks or indices than it is with options. It's just the nature of the game because options are more involved. There's more about volatility and theta. So you have to learn about time value. So as you look at this position and you start evaluating, when you look at a stock, you have gamma, theta, vega. You have all these things, and you also have the volatility, the implied volatility, which is in part the vega, but not exactly. Vega is the volatility of what you have, but you have the implied volatility that happens in the market that affects the option prices. So it's a difficult concept to understand all these things. My point is not to teach you about volatility in this lesson, but to understand that there's more elements when you're trading the options, whereas when I compare this to a stock and I analyze the trade and I get rid of that option, you can see all you got to worry about is just the delta, which is basically the stock movement up or down. 500 shares, pretty easy to understand, which means for every dollar move, I make $500. If a dollar goes up by 1, I make 500. If it goes down by 1, I lose 500. Pretty simple, right? It's a lot easier. The next thing is the losses. So smaller percentage versus more in the options. And this, again, can flip-flop back and forth. If you're looking at stocks specifically, for many people, they lose a lot less on a percentage basis in stocks. And that is because when you look at a stock, you can actually hold that stock for a long time if it has a pullback. Again, this will be getting into time here in a bit. But you can hold that stock for quite a while. Whereas with options, typically for many people, if let's say we're buying a single contract, if you let that thing sit, this is how most people trade, if you let that thing just sit and stand still, you're losing every day that $13.97. That's a lot of money. That starts to add up. And imagine doing that every single day, every single week. That continues to just add up. So you want to typically be a net seller of options and just constantly be making money rather than losing money. But for many people, a lot easier for them to understand it just on this concept of calls and puts up or down. But unfortunately, you lose money every day. So for many people, they lose more on options than they do on stocks simply because with options, they get out because they lose money with the time value. Whereas with a stock, you can just hold on to it and let it climb back up. All right, the next thing is the time. So I mentioned the time right here. Stocks, you can wait. Time with options, you can lose. But in certain instances, you can make more money from options with the time value. So as we get into this, and you can see that right here, as I stack a few contracts, if the stock stands still, okay, right now this is Google. We're selling a naked contract, 4 of them at the 700. If it stands still, and if we get rid of some of these slices, okay, if it stands still, you make $55 per day. Okay, $55 per day from that stock standing still. Okay, even if it pulls back a little bit and then stands still, you still make $55 per day at your maximum amount of $840. So that stock can really just stand perfectly still and you make your $840. Doesn't matter where it ends up as long as it's above 700. That's really all you want. And, this is where you can make time value work in your favor. Now, of course, I'm not recommending this trade, obviously, because you might be watching this video sometime in the future, or again, you're not taking into account your own personal risk. But I'm just showing you hypothetically, if it stands still, you can make $55 every day as long as it's above $700. That's just the way options work. And if you know and understand how time value works, it's working in your favor rather than, with a stock, it kind of has to move one way or the other. With an option, it doesn't always. Sometimes it does, but it doesn't always. And then finally, the amount that you can make. Okay, so the amount that you can make on stocks versus options on your capital amount. This is one thing that people are always asking, well, can you make more with options or more with stocks? In reality, it really doesn't matter, because it matters more about your own personal trading style and what works better for you. Because if option trading doesn't work, then don't trade options for you. Obviously, you can make money with options and you can make money with stocks. But if it's not the right approach for you, then you shouldn't be doing it. But as far as where can you really make more money? Well, since options are leveraged, in theory, technically, you make more with options. And let me just share with you how this really pans out and works out. So when I look at a stock, and let's just take a look at Google here, 100 shares, what is that going to cost you? So if you look at 805, okay, so our current price is 805, and we multiply that times 100. So your total value of cost is $80,000 and 500. So $80,500 to be able to put on 100 shares of that. Now, with an option contract, if I go ahead, and I'm going to play this a little bit safer on the option side, what I can do is let's put on a vertical, and I'm going to sell a put vertical. Again, not recommending you do this, but just to compare. Okay, let's put on about $80,000 worth. Okay, so here I got about 1,000, and I can spread things out. Okay, let's just say I spread things out a little bit. Okay, let's put on a few more contracts. That's more about 30,000. Okay, let's see, 40,000. 60,000, 75, 85. So we'll go back up a little bit. So here we're at about $80,000. Okay. And I can even go even tighter if I want. But here we're at $80,000. The stock is $80,000. You're going to tell me, well, with a stock, you can make unlimited money. If the stock goes to 840, you know, you're making $3,274 right here, 840, right? But it has to move to 840. With an option right here, if it goes to 840, look at how much I'm making, 11,842. Okay, because I'm 42 contracts on this trade, which means times 100, because each contract controls 100 shares, so add an extra zero. In either case, so when you're here, actually add two extra zeros. When you're looking at it here, you're basically making 840 at 11,000, call it $12,000 on these contracts. Okay, so basically here on $80,000, you're controlling 4,200 shares of stock. So you're leveraging up into the position. So if that stock goes to 840, looking at this, you're making $12,000 on these options, whereas here with the stock, 840, you're only making $3,319. Now, here's of course, the upside. If you go to 1,600 in the stock, you're making $80,000 in the stock. You know, that's a huge difference. You're making 80,000, but the chances of that stock to go into 1,600, think about it, doubling in a stock at already $800. How many stocks are above 1,000? Not many. I mean, Priceline and a few others, but in general, when you're looking at it, $80,000, that's double the stock price, right? So whereas here, if you're trading the option on this vertical, if you get to 1,600, the maximum you can make is 25,000. Doesn't matter if it goes to $3,000 a share, you'd still only make 25,000. But here, you know, if you're talking about realistic movements, you're looking at 840, $12,000, you know, on $79,000. And here, if the stock stands still, you make money. Even if it pulls back 20 points and then stands still, so as long as it's above that 765 level, so let's call it 780 for safety's sake. If it stays above 780 and stands still, I could still make $25,000 on $80,000 so long as that it stands still or above that 765 level. Whereas with a stock, if it goes down to 765, I'm down $4,000. You know, granted, with the options, if it happens within a day, you're down about $10,000, $11,000, you know, $8,000. You're down a lot more because of that leverage, as I mentioned. But with time, you know, if you move time forward, right, you can see that white line gets closer to the green line. And that's ultimately what happens to these options. So you basically are able to leverage up and make more. And that's ultimately what it comes down to, is these are the advantages and disadvantages kind of to these kinds of trades between stocks and options. So when you really look at it, the flexibility of options is just way larger versus stocks. You have more you can do. Pattern day trade, if you have a lower account, you got to wait 3 days on the stocks with a cash account or margin account. Here, what you have to do is you have to have a cash account, but you can wait 1 day for the clearance. Costs and fees, typically it's more on the stocks, a little bit less on the options. Dividends, you got the dividends in the stocks. So if you're a dividend person, stocks is the way to go. Options, they don't have dividends, but of course you could sell monthly premiums. That's really the whole point behind options. Probabilities, you got to really look at stocks a little bit more in detail for the internal technicals. Whereas with options, you can see probabilities a little bit easier, quite a bit easier. The difficulty, stocks are way easier to learn. If you don't have the time commitment for it, stocks are way easier to learn. Options, way more difficult. A lot more time required to learn options. As far as loss percentage, most people in general will lose less with stocks simply because they can wait and hold on to it. However, as you get better, time value can be used in your favor with options, and you can actually do a lot better. And then this actually can be a lot less on your losses. And of course, the amount that you can make is way more with options simply because of the leverage factor that we just discussed and talked about. So I hope that makes a lot more sense when it comes to stocks and options. We covered a lot of things here on screens. I have a lot of screens here. So we covered a lot of different things here on screen, and looking at things. These are just the basics behind stocks and options, and ultimately you need to find what works for you, because there's a lot of different trading styles, and they all work, but not all of them will work for you. I mean, look at sports players. They all make money, professional sports players, in their industry. But not all of them can play badminton. Not all of them can play basketball. Not all of them can play tennis. You got the tennis players who play tennis. You got the basketball players who play basketball. You got the football players who play football, or soccer players who play soccer. So they all do and focus on their own specialty, but they're all sports players. So the same thing in trading, we all trade, but we have our specialties, right? So for me, I don't trade Forex. I don't touch it. I don't really trade commodities. My thing, stocks and options, is the way to go. I also like trading indexes. But for you, might be a little bit differently. You might also like more penny stocks. You might be more of this type of dividend trader or this type of trader. So it's important to find your match and what works for you ultimately. That's ultimately the goal. The advantages, disadvantages, there are going to always be some advantages, disadvantages, just like in sports. Football, you have more injuries than you do in ping pong. That's just the way it goes. Contact sport, non-contact sport, same thing here. Stocks, options, you got advantages, disadvantages, but sometimes you're just built to be a football player or a ping pong player. That's just nature, and that's just the way it works. And for you, your risk tolerance is just about nature, finding what works for you. So anyways, I hope you found this video helpful, just to give you some insight. There's a lot of things we covered. Dig deeper into each one of these subject matters, because there's even more insights to them, and there's even more differences beyond what I just covered. But this hopefully will give you a starting point to looking at things and learning things a little bit more about stocks and options. And if you want to really take your learning to that next level, look at that course right here. This course, Options Mastery Series. This is the second course in the series. Highly recommended. I'm telling you, it's world-class material. You're not going to get any better option trading than this. It's 22 hours. So if you just sit down, watch this straight all the way through, it's going to take you about a week. But you got to be committed to this business. If you're not committed in this business, might as well not pick it up. But if you're committed, if you want to learn options, if you want to get this business right, if you want to learn to make successful, consistent money month after month, every single time, or just about, then this is the course for you, because it's going to really share with you the strategies. It's going to share with you the different concepts, variations, statistical probabilities, a lot of different things. So just take a look at this video right here on screen, and when you watch that, you'll see some sample footage, and you'll see really what the course is all about. It's in detail, and it's the best out there at the moment. It's world-class training. You're not going to get anything better than that right now. And I'm continuing to expand this. We're going to here probably every couple of weeks, depending on my time schedule here. The holidays always get busy. We'll be releasing the Iron Condor section, which is basically filmed. We just need to do the study guide, the calendar section. All these things are getting released here time after time, slowly. So if you're serious about your education, this is the best material out there. So in either case, I'll probably try to post some critical charts as well here as we get into the evening time or early tomorrow. And that way, for those of you that are following the critical charts, take a look at those or keep your eyes out open for that. And other than that, enjoy your weekend. And if you want to go ahead and continue watching some more training videos, then click the thumbnail right above here. But if you want to go ahead and sign up to the newsletter list so that way you're notified when I release new content and new material, then click the click here button somewhere over here on that side and you'll be taken to that page. So thanks again for joining me in this week's episode. And in the end, remember, there's more to life than money. Go out, do what you love, contribute to other people, but most importantly, live life abundantly. Do those things and make the most of it. All right, thanks again, and I'll see you next time.